Hey everybody, Boris. Welcome to the Commodity Dollar Weekly Update for August 15 to August 19, 2016 for the Aussie dollar, dollar CAD, and Kiwi dollar. Very interesting week for the commodity dollars this week because I think we're seeing essentially possibly the turn in all of those pairs strictly on a profit-taking business. I mean, for the last month, we've had nothing but yield runs towards the Aussie, towards the Kiwi. They took the highs. But last week, we had the RBNC cut rates, and despite the fact they cut rates, the Kiwi rallied simply because they didn't cut as much as the market thought. So really, in a land of blind, one-eyed man is king, and that's certainly been the story for the commodity dollars that continue to have a yield versus everybody else that has no yield or even a negative yield on any of their short-term debt instruments. That makes still the Aussie and the Kiwi very attractive, but I think a lot of that flow, the carry trade flow, has kind of exhausted itself over the last couple of weeks, and we saw last week, I think at the end of the last week, perhaps the first turn in terms of profit taking. I don't think it's going to be severe profit taking, but there could potentially be 100, 150 points worth of profit taking in all those pairs, perhaps this week. And that's something worthwhile to watch for, simply because we have nothing else. The big event this week is the Australian employment data. That's going to come out on Wednesday, or Thursday to Australia, Wednesday to us. But it's really not going to be, I think, a much bigger market mover unless we have a huge variance from what the market expects. For the most part, unless we have a severe contraction in employment, which doesn't appear to be very likely, the RBA, I think, is going to remain relatively stationary in its policy of just keeping the rate at current level for the time being. We'll be watching that very carefully because I think that's about the only thing that's going to be market moving in the commodity dollar land. CAD still continues to be essentially an oil trade, and it's really a question of whether we see 50 or 40 that determines where CAD is doing. CAD has been really trading to the downside. Dollar CAD has been trading to the downside simply because we're moving towards the 40 level. But aside from that, the Canadian economy itself has actually performed quite poorly because of all those after effects of contraction in the oil price are finally starting to kick into the Canadian economy. And New Zealand still continues to perform relatively well. And that was the reason, actually, why the Kiwi rallied, simply because the RBNC could not justify a sharp cut of 50 basis points against what is essentially a relatively decent growth pattern in the country. And their only primary reason for cutting rates was deflationary pressures that are coming in from abroad. I still think, though, that the Kiwi faces a potential of profit taking. It's sort of everything got baked in. We really ran way up on expectation, and therefore we have a potential here for some profit taking as the week progresses. Let's take a look at the charts here. Let's take a look at the support resistance points first and see where things stand. Aussie still very much a 77-75 trade, and I think we stay within those ranges, very closely. Dollar CAD has really expanded a little bit to the downside, and that's simply a testament to the strength of oil. But oil really needs to go up above 45, maybe even 47 for dollar CAD to break this 28 handle, and we'll be watching that very carefully this week. And then Kiwi just kind of drifting. 73 is a clear triple or double top resist point here, but 70 is pretty strong support. Let's just take a look at the charts here and see where everything stands. We can get a better idea of what's going on. So here's Aussie dollar, still staying in this long-term uptrend level. I mean, the story in Aussie has always been to just buy the dips, but I think given the way the price action has happened, actually what's interesting is that we had negative U.S. data. This is one of my more favorite signals that the market sends us. This is where you have fundamentals go one way and technicals go the other way, and when you have the divergence, you want to listen to the technicals. So what do we have on Friday? We had very negative U.S. data. Retail sales failed miserably. They were bad. This is dollar bad news. The Aussie dollar should rally. What happens? The Aussie dollar falls off. The Aussie dollar actually sells off into the bad U.S. news. That's a big signal. That means that we have a very reasonable chance to make 76, maybe even 75.50 on profit-taking flows. So to me, this is a very clear trade to the downside, and really until you're only wrong if it goes above 77.55, which is the peak here, above 77. It's kind of a very clean, clear short on just pure profit-taking reasons alone. And then maybe if we have weak employment data, that will just be the catalyst that brings us back down to 75.50, perhaps even 75. 75, much deeper support, and certainly probably that's going to be where a lot of the support is going to materialize. 76 is going to be, of course, the first level of support at the front of the week ahead of the employment data. But overall, it is, I think, a very clear sign that the trade in the Aussie is to the downside because the technicals are giving you a better signal than the fundamentals. Now, dollar CAD is really an oil trade, so it's hard to just kind of trade this. Again, it's your view on oil is going to tell you your view on dollar CAD. So can we break down 2900s? Yes, we can. Overall, 2700 is the big support level. Dollar CAD. One of the interesting things you'll notice is that once it makes a turn, so we've had what 5-6 candles of down days. If we have an up candle, that's generally a pretty decent signal that there could be continuation further. Because every time we have an up candle off of a multi-day sell-off, there's usually a multi-day move the other way, right? Sometimes it takes a couple of days to kind of extend that move, but it almost always extends it. Even over here, we have a small interruption of a downtrend. It does eventually sort of test the lows and then extends the uptrend to the other side. So worth watching this. Caddy is essentially range bound 32 to 28, and it's coming close to the bottom of its range. You can trade it both ways. You can just decide to just buy and hope that this is the range bottom and see if you get the turn, or you could wait for the turn on the dailies and then trade after that. Of course, you're going to be in a worse position then, but maybe with a stronger signal for a possible turn. And then last but not least, the Kiwi trade. Big flame out, right? Big flame out both on the RBNZ and then on Friday, where we have a nice shooting star doji. It really, I think, shows a triple top here. Certainly begs the possibility of 7100 as a test and possibly 7050. 7050 is a stronger test here. 7000 is the much big 6950 to 7050 is the big support zone. The lower end of the range zone. So if you sort of get it, one takeaway from all of the COM dollars is we're going to the opposite end of the range at this point. I think that's about as smart a trade as you can make, which is you trading, you sell the top of the range and you hope it goes down towards the end of the range, and you use the top of the range as your stop, because given all the price action and given the fundamentals that we have this week, it's quite likely that's going to be the path of least resistance where we're going to go. So to review, Aussie 77 to the top side, 75 to the bottom side, 73 to 7,000 on the Kiwi. Those are wide ranges, and within that, of course, 7150 is in near-term support, with 7100 as probably the stronger support. And with Caddy, it's really 128 that's really the hardcore support to the bottom, and 132 to the top. Quite a lot of it dependent on where the oil flow goes. So I wish you guys the best of luck, the best of trading. And remember, with COM dollars, it's really going to be range trading as the week progresses.